Good afternoon, everyone. This is Joe Henches with Beyond the Chart. This is a weekend update for Saturday, November 16th. We're first going to take a look at the Dow Industrials like we always do. By the way, this is Beyond the Chart, where we help folks learn more about the markets, make better trades, and to be successful. That's my goal. That's what why I'm spending time doing this. So hopefully this is of benefit to you. All right, we'll as we look at the Dow, we've got the RSI I'm showing here, and one of the things I haven't talked about before on any of it, either stocks or the indicators, is using trend lines on the RSI. And this one isn't quite as strong. I like to use the angles down here where it's gone from the overbought down to the oversold, or maybe not even quite oversold, and use the trend lines to break. And what I try to do is, like, if we look at this for example, and we'll briefly talk about this, you break the trend line, okay, and you're closing above the blue line, which is the 10-day exponential moving average, and then you close above this middle line, which is the 50 on the RSI, then you're a lot of times ready to go, okay? And now this also works in reverse, and I don't have it, but I'll show it over here on the S&P 500, I believe. Let me go down out of here. Yeah, on the reverse, if you can break a trend line, then you start looking for, potential downward move. You start to get closes below the 10-day, then okay, that's like a confirmation. All right, so just wanted to kind of pass that on to you guys. You can kind of take a look at this as you study back on the video. I do think in the S&P 500, I've talked about this before, we're in 1, 2, 3, 4, we're in a fifth wave up of a fifth wave, okay? So I do think there's a good chance this is going to extend, because this 1 and 3 are about equal, and when you have 2 out of the 3 are equal, the last impulsive wave has a good chance of extending. Now the interesting thing about that is that will allow, if it extends, the Dow to catch up, because I think we've got the Dow in a slightly different count, although the Dow is getting stronger and continuing to push. So, that's the good news. The NASDAQ basically is just kept pushing along to new highs. We are getting some divergence in here. Not much of a day on Friday, just a small day, but it's kind of pushed. There's a good chance we could get sideways in here, especially if we get, if we can't get above these highs with this indicator. New York Composite looking strong, coming back up. Similar type of activity when we look at the New York Composite. It broke through this slight downtrend line, as you can see here. It just helps. Sometimes what I've noticed that happens on the RSI is that the RSI will give you the signal earlier than a trend line break actually on the stock chart itself. So I think that's kind of interesting. Here you got bullish divergence, didn't go to a new low, didn't go to, and this one did. So it's a sign that it's getting ready to turn. And then if you were to draw the trend lines in here, right, and here, you would see that as you start to break and then get above the 50-day, it's ready to continue the move. So, the trend line break and closing above the 10 is a good sign, especially if you get 2 consecutive closes above the 10. Then, it's worth a shot to start getting in. So that's another way of looking at it. Russell 2000, not quite as strong. Again, we talked about this. It was very strong early on. Now it seems to be lagging. We'll see if it starts to catch up. Short-term trend indicator, which is the trend. A lot of people, it's various people call it different things, but it's TRIN. The reading today is at 0.831, which there's the reading on September 11th over here was 0.836. And there were no other readings this year lower than that. So I'm starting to get, a little bit cautious that we're getting, a lot of bullishness coming in. Doesn't mean we're at a top, because we're not seeing some other things yet. I'm not calling a top, but I'm just saying that's an alert to be paying attention to. New high, new low indicators seems to have turned back up here a little bit. We had 233 more highs than lows for the day, so that was good. Let's see. The one thing I wanted to point out too was that if you start to get a breakdown below the zero line, that's when it's a sign that this thing is rolling over. And you know, we got a couple of days in here, didn't quite happen in early October, but it sure did right after the, you know, the peak on August 1st, and it did in here on August 5th and 6th. Did it on June or May 30th or 29th and 31st back in here, and it was kind of a sign that it was going to roll over. So it's something, you know, this is good to watch for this break of the center line in the activity, but also for the extremes, which is what I'm kind of watching for. You can see the dates there. I want to take a look. Let's see the financial ETF. It pushed to closing at a new high here again, which I guess it did on Friday or Thursday also, but it had not closed above this high 2104. Well, it's now done that, so that's a good sign that it continues to push forward, get in sync with the markets, which is great. If we take a look at Amazon. You know, let me take a look at it on a monthly basis first, okay? And let me move this out of the way here. I think Amazon has had one major move up, primary wave, a wave 2 correction, and in my opinion, we've had a large wave 3 move since then. 1, 2, 3, 4, 5. Now, the interesting thing in Elliott wave, this cannot be wave 3 and wave 4 because wave 4 cannot overlap wave 1. That is one of the basic rules of Elliott wave. So that's one of the things a lot of times we'll rule out. So some people say, well, why is this not, you know, like wave 3 and this wave 4 or whatever? You cannot have it overlapping wave 1. So you notice as we look at the 5 waves within wave 3, wave 1, wave 2, wave 3, wave 4 does not overlap 1. This could not be wave 3 because wave 4 would have overlapped 1. So you start to rule out certain things, and that's what makes me start to believe that, and you could see the exponential type of blow-off type move that we're getting into. Now, here's the thing that I think is happening in here. You've seen we had this move was somewhat of a zigzag move, okay? Kind of a straight line pullback, and it pulled back deep. Okay, here's the beginning. It pulled back, you know, way back down in here. Okay, that's typical of a wave 2. So now, if we get wave 3, what I'm expecting in a wave 4 is more of a shallower and more of a flat, where you go A, B, and C, and it's going to be more of a shallower correction kind of thing. So that's really what we're expecting. Let me get rid of this so I can then go and control this and go. Let's take a look real quick at the weekly. The weekly kind of gives you a little bit better picture of the waves. And then, you know, since wave 2, we got wave 3, wave 4, and wave 5. Now the thing, it's been a little hard to diagnose the waves in here in wave 5. I'll be honest with you. I looked at it and I kept looking at it and I was like, okay, this is wave 5. But the one thing I've noticed is this final stretch, this final wave up does look like a fairly clear wave 5. So I'm looking at 1, 2, 3, 4, and 5. So be on the alert here if you're in. You're starting to possibly get a little bit of divergence in here. If this trend line's on this, again, these RSI, it's 10-day RSI. If this were to break down, then you're like, okay, you know, start getting real cautious. So anyway, that's it. Wanted to talk about Amazon. It's, like I said, the post, it's Amazon's time of year. Stop by the website, check out the post if you've gotten here via YouTube. And I will be back tomorrow with some trade ideas for the week. We'll review what we talked about last week, and we'll go from there. Have a great Saturday evening, and Sunday. We'll talk to you tomorrow. This has been Joe for Beyond the Chart.